what's not doing well is, or what may not do well going ahead, is real estate. The value of unsold inventory for all of India real estate put together crossed the 1 lakh crore mark in Q3. And just when realtors were beginning to see some traction for ready to move in and nearing completion properties, GST Council has set up a GOM to look into ways of reducing the tax burden on real estate. Well, so lots happening essentially within this pocket. The question mark only is what happens to new launches, what happens to existing projects, and what happens to prices. Let's talk about all of that with Pankaj Kapoor of Liases Foras. He joins us right now on the show. Am I pronouncing it correctly?
Yeah, absolutely.
Perfect. Thanks so much, Pankaj. Thanks so much for joining in. Now, you know, the number kind of took us by surprise. I just wanted to understand from you, who's looked at this space for such a long time, as to how does the current situation of real estate compare with similar situations in the past?
Yeah, like if you look at post Lehman Brothers, if you look at 2008, 2009, we had limited inventory in the markets. We had all India, if you take data, and the inventory was in the range of around 3 lakhs units, which has grown to become 10 lakhs units, approximately 9.5 lakhs. This is top 8 cities. If you take all India 60 cities, the number will stand close to 14 lakhs units.
Wow.
So during this time, if you see very interestingly, the prices and supply both have doubled. The supply has grown 3x and the prices have grown around 2x, while the sales more or less remain muted at the same level. So there's no growth in the sales. So what in other way suggests is that the builders' commitment to build has increased 3x because they have introduced more supply in the market and with the increased prices. While since the prices got increased, the sales did not really grow. The market got shrunk. So the growth in the sales has been very, very less. So from 2,30,000 crore rupees of top 8 cities, sales has reached to around 2,50,000 units. But the number of units which got introduced in the market has grown 3x. That's why the denominator has increased. The numerator hasn't. And that's what is the pressure. And if you see the whole data from the point of view is from very way back, like from 2005, when the private equity and the FDI capital got introduced, like post-liberalization real estate market, the very interesting trends which suggest that the land cost has grown 9x, selling price have grown 4x.
Selling price of?
Selling price of the apartment has grown. So the property which used to be 2,700 rupees has become 11,500 rupees. So the 4x increase in the selling prices, land prices have grown 9x. The finance cost of the developer has increased 7x because the gestation period in sales has increased. So earlier, if the building used to get sold in 3 years' time, now it takes over 6 years to sell. That means that his cost of debt and funding, everything has increased. So it's a vicious cycle. Is like cash flow, a vicious cycle in which the whole real estate market has really got caught on, which is high cost of the capital, high cost of the land, has increased the selling price so high, which has become uninteractive. So the consumer can't really purchase, and the builders are into a fix that the high cost is not letting them to sell. And at a lower price, so the sales is not happening because consumer are not interacting. His affordability is not meeting at this price, and the cost is also not letting them to reduce the price. So it's very, very precarious situation in the overall thing, which is really set in.
So, okay, so just a quick follow-up. While the number of units may be substantially higher, the lakh square feet, is that also substantially higher than what was in 2009?
It is. Okay. Exactly.
That is also very high.
Yes, absolutely.
So the reason I asked this was because we hear a lot of people now going into this low area or low cost housing, or not just low cost housing in terms of the way it is made, but also the size of the apartments being smaller. Now my question therefore would be that what happens going ahead? The builders, I know for a fact that a lot of builders, at least in the Mumbai region, can't blink because they've sold the apartments on the Muhurat De Ka Sauda at level X.
Yeah.
Now it is at level X plus whatever, they can't take it to X minus something, because then they have to refund the money and they don't have the money.
I
right?
agree.
So what happens over the course of the next 12 to 18 or 24 months?
That's why you see there's no cessations of new launches, okay, which is continuing. And that's why the inventory is again a big issues.
Like, can you explain this?
So it's like that, like, you know, if I want to get out of this particular problem, it's like the elephant in the well. So there is a water you have to fill for elephant to come in. That means you have to reintroduce new supply to bring in more sales.
At a lower price.
At a lower price. That's what is happening. And what also, if you look at that, we have done close to 54 billion worth of financializations in real estate market during this period. Most of this has gone in for land acquisitions and land purchases. Quite a lot of land is still lying unproduced. Okay, and there is a now issue that the land is not being sold the way it used to be sold earlier, because there is no taker for it. So builder can't continue sitting on that particular land. So for that, they have to continue coming forward and bringing new supply in the market, which is continuing. Even the September quarter post the NBFC crisis, which I've seen, my data is being collated. It's not that the new launches is not really a Mumbai market. If you look at last quarter, we had around 13,000 unit new launches. This quarter again, we had around 12,000 unit new launches. So it has not really come down. And I don't see there's going to be new launches which will be reducing. If it were to reduce, that means it's going to be a big impact to the housing for all, because the government want more and more supply. In Mumbai, the government has increased the FSI. So all the redevelopment property which were unviable earlier has become viable.
Sure.
So the supply flow will continue to be in the market. So question is that it will continue to be putting pressure on the prices.
Okay. So do you expect a price correction, a headline price correction which is meaningful? Right now also, if the prices of a particular project is, say, 15,000 rupees per square foot, I think it's a given. Everybody who is going there knows, okay, boss, if I sit in front of him with a checkbook, the prices will be 10% lower at least.
No, it is.
Do you reckon the headline numbers will come off?
I am sensing, which has reached to an inflection point. So far, if you look at the resilience of the markets being like that, they have defied all kind of a corrections hopes. It's like even during the time of demonetization did not happen, the RERA and GST. Although the sales is muted, the problem is increasing, builders inventory is increasing, the debt, NCLTs, all cases are happening, the prices are holding. But I'm seeing that today is an inflection point, because the reason is the NBFC was funding. And they have really put a cessations to that. So and today this period is also election period, where a lot of money will be sucked out of this. So it's like a kind of a situation which is an inflection point, where I see the luxury segments and also in the affordable segment, because affordable was really being funded by all these NBFCs which are into a problem. They have really got impacted badly. So builder will have to increase their customer advances, the inventory which they are sitting on for a long period of time. And today's is a value buyer.
Okay.
Or they're not the price buyer, not the product buyer.
True.
So I think there is an inflection point where I'm seeing the correction, and I'm sensing in the luxury market there is already 20-25% corrections which is there available.
Okay, I'm sure you look at the real estate markets across the world as well. I'm not asking for a price performance there, but when the interesting point is that for a sector which contributes 8-9% of the GDP, the largest player by value, at least, and we look at the listed space because can't quite value an unlisted player. The largest value by listed player is what, less than $5 billion, I presume.
Yes.
As a percentage of market cap, 1%, 1.5%, whereas the contribution to GDP much higher. Do you sense that the larger, more dominant, stronger balance sheet players over the course of the next 5 years have the potential to become much larger because of these things? They can
I disagree.
You disagree?
Disagree.
Okay. Why
because
so?
The reason is, like, if you look at across the world, you don't really have one large developers really having a big.
So set of 10 large players?
Yeah. So if I were to see the data, that 50 large developers, so right now contributing around 25% of the sales in India, which is like 0.03% of the developers contributing 25% of the sales in India, which is large developer. But having said that, their numbers are shrinking.
The number of builders are shrinking.
No, their contribution is shrinking because the reason is there are smaller developers which are increasing. After RERA,
after RERA, they are finding it difficult.
No, it is other way around. And the problem, there's another sides of it. If you look at the top builders are the one which are into a biggest distress, not the smaller one, because a smaller one were not having much of the access to the credit. They were dependent upon the customer advances to finish the projects and things like it. So the problem with the smaller developer is not there. So market post RERA, like the stock market or any other market, if you look at, is becoming broad based. Because the earlier what used to be there, like the lenders used to go to the large developers because that used to be available in the public domain.
Sure.
People were not really aware of the smaller developers in the local market who was doing good things. So the question.
Okay, let me rephrase my question then.
Yeah.
Do you reckon that quality developers will stand to grow disproportionately? The reason I ask this also is because I've heard numerous conversations about how a small developer having a very good project but not having the wherewithal to muddle through the RERA waters and finish the project on time, fearing the penalties that come in, is approaching a quality large developer to finish the project.
This is just a hearsay. Like, I would not say that this holds true. It's not.
Okay.
The RERA hasn't really come in and changed the way it is happening. So if you look at more or less the way the functioning is, that is more or less same. Like, only the escrow has come where the builder has to maintain the money. What has happened that the over leverage are the large developers, not the smaller one.
Okay.
And it's a broad basing.
Okay, so I rest that argument.
Yes.
We're not getting into that. I just have time for one more question. I just want to do a repeat of what I asked you.
Yeah.
You reckon that prices, not just in the peripheral regions, but the metros as well, could now have the first meaningful downtick that we can see over the course of the next 12 months?
Yeah, so you look at the peak locations are slated to go down first. So if you look at, it's like that, like the luxury segment will have a maximum, because it's like that where the luxury segment you have higher margins and we have more inventory available. So if you look at in Mumbai, you look at 3 crore plus bracket, we have over 80 months of months inventory. But if you go down to 30 lakhs and 40 lakhs unit sizes, my month's inventory reduces to 36, 35 months. So the gradations of corrections will be higher into high cost and lower into the lower cost.